Right, hello everybody. Steve Griffiths here, developer of the MT Predictor software program. Welcome you today to today's MT Predictor webinar. And as usual, I'll start with our risk disclaimer. And if you could just let me know by typing in the Q&A, the question and answers box, that you can hear me okay, that'd be appreciated. So just move your mouse over to the left-hand side of your browser window and you'll see the Q&A box pop up, or allow you to click on it there. So just remind you that all examples of this training room should be considered as hypothetical. No trades are actually taken. They're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly, accept that losses can and will and do unfold. No matter what trading approach we take, there always will be losing trades. It doesn't matter what we do. Right. Where should we start today? I think today we'll go and have another look at crude oil. This is not a market I tend to, or haven't in the past, followed in much detail myself, but last week we had a good look at 15-minute chart of crude oil. I think that's on the back of a question from one of you guys. We were looking at the W3 or the Wave 3 trade setup. So we went through in great detail what that was all about. I'm just going to mute the microphone for a sec, just while I cough. Just bear with me for a second. Sorry about that. I didn't want to make you all jump. But I hope you can hear me again now. Right. So the Wave 3 or W3 trade setup, if you want a review of that, you can go to the member section of the website and view the recording for last year's webinar. I recommend you do that because it's a good one to really know and understand. But I thought what was interesting is we had another example here of a W3 trade setup on crude. So I want to just have another look at this, just to remind you what we're looking for, just show you what sometimes happens after the setup has unfolded. Because last week, I think it was absolutely a perfect example, wasn't it? It did a perfect 5-wave swing and everything was working out rather nicely. So I want to show a bit more of the ugly side of, what happens after setups, how they can unfold. So for you guys who are new, just remind you that MT Predictor is not a black box system. We don't take all our setups or on our charts, perhaps in the direction of our MTP trend color. We don't do that because we know and understand, but more importantly, accept. That's the important point. We accept that markets are random about half the time. And this is so important to really understand, is that about half the time, you really don't know what's going on. The markets are just in such a random position. So the trick is trying to find the time when the markets are doing a clear pattern. For this, we use our multi-time frame approach. So the time frame you're trading on, so this example, this is a crude oil, this is a June crude oil chart. We're looking to trade on the 15-minute. So we go to a higher time frame. Now, a higher time frame would be the 1-hourly chart. So what we're looking to do, we're looking to go out to a time frame that's between 3 and 5 time frames higher. So if you're on a daily, it means going out to the weekly. If you're saying on a 15-minute chart, it means going out to the hourly. If you're saying on a 3-minute chart, like the E-minis, we'll have a look a bit later, it means going out to the 15-minute chart. Now, I just want to use our training mode this is our standalone version. We have add-ons for NinjaTrader 8, NinjaTrader 7 as well, if not many people are using NinjaTrader 7 still, and also add-ons into TradingView as well. So these are our 3 platforms. So just to remind you, this is what we do. We place our DPs, our decision points, on the chart. Now, for you guys who've been with us for a while, and if you haven't, hopefully you've had a look at the recorded webinars, but when a market is making a move back up like this here, the last swing into the last high or low, do you see that? This is the last swing, okay? That's the low there. That's the last swing into the low. This is the first pivot to use to anticipate support or resistance. So this is the place we do the DP off. So we hover over the pivot, right mouse click, do decision point. Can you see how that's on the chart in advance? For you guys who want a bit more detail, if I right mouse click here and do Elliott Wave Intermediate, you can see this is actually a 5-wave sequence. So after a 5-wave sequence is complete, we then look for the DP of the prior wave 4. So it's one in the same, basically, isn't it? It's the last swing into the high or low. But the most important point to understand is how that's on the chart in advance. I can't stress this enough, in that we are looking to work ahead of the market. You know what? We're not looking to be alerted by a scanner or the market analyzer or alerts. We're looking to work ahead. So this is on the chart in advance before it gets there. So if I turn training mode off, you can see what the market did. It went up to that level there. Do you see that? That's where it made a reversal. Now, what we're looking for is the market to make a reversal at the level. Sometimes it does it perfectly. Sometimes it goes a little bit beyond, like in this case. But as long as it doesn't make 2 consecutive closes beyond the level, that's what we use to deem that the level's failed, or the market's going to carry on up 2 consecutive levels beyond that level. Sorry, 2 consecutive closes beyond the level. Of course, it didn't do that. It started to reverse and come back down. So here we deem the market is indeed reacting at the level we anticipate. When that happens, we deem the market's clear. So if we now come down to the shorter time frame that you're looking to trade off, can you see how the picture suddenly becomes a bit clearer, because this is where the market's making a reversal. After this, the market trend is then deemed to be down. There was a sell set up here. The VS one, this wasn't a very neat and tidy one, because it basically went in an inside bar, didn't really do much, and then went sideways for a while. But if you had taken of this would have been a -1R loss. Remember, we used position sizing to keep the initial risk small and under control. So remember, losses can and will and do unfold. So that would have been a -1R loss. But after that, can you see how after that the market pattern then looked like it's unfolding nicely? With the reversal at the higher time frame DP, the initial move was wave 1. We're then looking for an ABC correction, which is what we got here. ABC into, that would be a larger degree. Whoops. Sorry. A larger degree wave 2. It doesn't quite come up on this particular swings here, but that would be a larger degree wave 2. So what we're looking for now is, after this wave 2, we're then looking for a wave 3 swing to unfold. So this is when the W3 or wave 3 trade setup is designed to give you a potential trade. There was actually a history triangle on this bar here, so you would have actually come in by right mouse click, do analysis on this bar here. But if you hadn't have got in there, then this next one would have given you a chance to come in. Now remember what we're looking to do in a 5-way or in a wave 3 setup. We're looking to trade the wave 3. We like the wave 3 because it's normally the strongest and longest in a completed 5-wave sequence. Now the example we showed last week, it was really clear. The pattern looked absolutely brilliant. It really did. It was a picture perfect pattern. But the reason I want to show you this is what happens sometimes with the market. In that at this point in time, the market picture looked clear. The market moved down to the typical wave 3 WPT. This is where we're anticipating potential support. In other words, the wave 3 is likely to end at this level. Can you see how the profit at that level was large, not just in dollars, but large in relation to the initial risk? That's why we like these trade setups. But the reason I wanted to have a look at this example is look what happened afterwards. The market has just chopped sideways, hasn't it? It's gone absolutely nowhere. So if you were a traditional Elliott wave analyst, you'd be thinking this would be a wave 4 correction before it's going to go down to new lows. But do you see how choppy and horrible it is? So this is a perfect example of why I like to look at the markets in isolation. So effectively what we're doing is we're drawing a horizontal line here. We're drawing a horizontal line here. We're saying within those 2 lines, then the picture's clear. In other words, it's doing what we anticipate. After this, the picture starts to get unclear. It starts to get choppy. It starts to get random. So can you see why I like the idea of trying to take a chunk out of the market when the picture's clear and then just standing aside when it's really choppy and horrible? Now, Elliott Wave purists will say, oh, that doesn't really work very well because you're ignoring part of it, therefore it doesn't work, therefore blah, 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 etc., etc. But as traders, does it matter? As traders, all we're looking to do is have trade setups that, yes, can carry losses, but that losses are kept small. Have trades that are large, but not just in dollars, but large in relation to the losses or the initial risks, the R units. So that's what we're looking to do, just to take chunks out of the market when the picture's clear. And then when it's not, it's like doing this pattern, we just stand aside and say, well, actually, the market pattern's not clear. Why bother trying to scratch your head, trying to figure out what's going along? Let's just wait until the picture becomes clearer. Does that make sense to everybody? Does that seem like a good way to actually approach trading? In other words, we're only looking to trade when the picture's clear. And hopefully you can see here, this was another good example of our W3 or Wave 3 trade setup that unfolded again on a 15-minute chart of crude oil. So if you guys, you trade crude, a nice little trade there for you. Just take these off so they don't hang around when I've closed the chart. Right, are there any questions on that before we move on? Yes, Sylvian, you're dead right. The only purpose of trading is to make money. But you'd be surprised, it doesn't seem that by the vast majority of amateur traders who you get on the forums and things. The vast majority of amateur traders seem to want to know where the market's going. They seem to want to have a perfect pattern. They seem to always want to know what's happening next. And they don't seem to understand that actually you don't need to know that the whole of the time. And that you can have times when the market's totally random, you don't know what's going on. That's fine, as long as you have times when the picture's clear, and that's when you work with the markets. Which setup? Are you talking about down here, are you, Alvin, or which setup? This trade setup, or which one are you talking about? Just let you type in there. Yeah, the picture's clear here because we're coming off this higher time frame DP. If we now go to the higher time frame again, the 1 hourly chart, where's the next support? Well, there's that swing up to there. So here's that's the low level there. So this would be probably the next support zone. So you're not really, if anything, the large trend is down into that low there. So there's no more support until this level here. So of course that would be, it's just chopping sideways. If anything, it's going to, the large trend is still down into this 60-minute support here. But what I'm saying is because it hasn't reached that, the picture's not as clear. To me, this just looks like it's sort of chopping sideways, and there's no sell setups here anyway. If we had like an ABC correction here, and we had a nice sell setup in and around here, well, that then might have deemed to be a bit of a clearer picture, if that makes sense. Right, let's have a look at some other markets. Let's go and have a look at, I want to have a look at the YM on a 24-hour chart, just exactly the same kind of process. This is a 3-minute chart of the YM. This is exchange delayed data. I've got just using exchange delayed data in this particular program at the moment because it gives me crude and gold and forex data a bit better than my real-time one. So bear with me that this is actually exchange delayed. So I was looking at this VS setups here. So again, we use exactly the same procedure as we go to the higher time frame. So on a 3-minute chart, the higher time frame would be the 15-minute. I'm not going to use training mode because I'm just going to go back to that pivot and show you that if you right mouse click there, that pivot, look what happened here. The market went up, came to the DP, started to make a reversal. I'll just place the DP off that level to show you where the next support level was as well. But can you see how there was resistance there? So when you now go down to the shorter time frame, you see how when it came up to this level, then it was a potential clear picture. In and around this level here, it probably wasn't quite as clear because you weren't coming off DP resistance of that pivot. Even though the MTP trend was red stroke grey, these setups here were not as clear as this one because they weren't coming off 15-minute resistance here, if you know what I mean. So this is why I always tell you, no, don't just look at the MTP trend color. It's also tempting just to have a look at this and just to try to trade just off this. I mean, I sometimes regret actually coding this. I mean, we coded it in the first place to try and make it slightly easier to give an easy picture of the large degree trend. You know, because it's blue for up, black for process making reversal, and red for down. But the trouble is, because the market goes sideways so often, that you do get times when you shouldn't be doing any trading at all. So the best way to trade is like we've always done, like we used to do in the original idea, is that, you know, without this MTP trend colors, we just work off the higher time frame support and resistance, and only when the picture's clear. That's by far a better way to do it. It really is. So that's why don't get fooled into setups that are with the MTP trend color if you can't see good higher time frame support and resistance. Okay, so this is why I always tell you, go to the higher time frame chart, put your higher time frame support and resistance levels on, and then work off those to see whether the picture's clear. That's what you should be doing first and foremost. And it does frustrate me actually when we get new people subscribing and then cancel after a few days because they don't come into these webinars, they don't sit and learn and actually understand what you need to do to look at MT Predictor. I mean, so many people will just look at this to say, oh, those setups didn't work, therefore it's a load of rubbish. So do you see why you actually have to understand what you're doing? And if you do, you know, that the picture becomes a lot clearer, doesn't it? So here you're at higher time frame resistance. There was a history triangle there. Do you see that little history triangle? So if I right mouse click over that red cell bar, do the analysis, that actually gave you a VS cell setup there. It went up, it made a double top. This is where sometimes you can get a history triangle without it having stopped you out. Okay, so it's a profitable trade, but on history triangle. That's why it's always worth placing your analysis on to see what the setup did at the time. So don't just look at a history triangle, say, oh, like that one, that would have been a losing trade, therefore this would have been a losing trade, because they're not always losing trades. So that's very important to understand. That's why you must place the analysis on. The market moved sideways for a few bars, did come down for a 3.3-hour profit. So the reason I want to show that is because if I go to the ES yesterday, this time I'm going to look on a day session only chart. A day session only chart with the regular trading hours from 9:30 to 16:15 is that if we go back to here, you see this looked like provisionally a potentially good trade setup. MTP trend was blue. It was a W3 trade setup. You could have put your analysis on and said, oh, wow, potential 10-hour profit. That looks like a very good one to take. That could be really, really good one to take. But what's the one thing we need to have before we decide whether the picture's clear? In other words, we don't just look at it like this. To decide whether the picture's clear, we must have had support here on the higher time frame. So I turn this off. I go to the higher time frame chart, which would be in the 15-minute chart. I'd have had to come off this pivot low here. Right mouse click, do decision point. Can you see how it didn't quite make it? Do you see that? If I go back to the 3-minute chart, do you see how it wasn't quite at support? Do you see that? So even though the MTP trend was blue, and even though that looked like potential good trade setup, you weren't at higher time frame support. So if you had placed your trade setup on this, you would have been taken in long and then stopped out. So this is very important. It's very important to always look to trade when the picture's clear, and don't be tempted to get too gung-ho about setups that look good just on trade setups. Yes, Mazir, I must admit I've been banging my head against a brick wall for 20 years with teaching people how to use MT Predictor. It is sometimes it's very frustrating. I mean, you guys who come into the webinars, hopefully you appreciate and see what we're doing, and therefore you can understand what to do, and you do well out of it. But you'll be surprised at how many people are just not interested in taking the time to learn how to trade. Is this the vast majority of amateur traders? I mean, about 97% they say actually fail in this business, and the vast majority of them will buy a system, or subscribe in our case, have a little play around themselves, chuck it in, and then go on to the next one. Then do exactly the same on that, go from one system to another system to another system to another system. Never ever sitting down and actually working at any particular system to then understand how it works and then make it work for them. There's so many people in this business who are after just a quick buck. It's just really it is quite frightening about the statistics about the number of people who fail. But once you become a professional trader, you can appreciate that. You can see why. And then you can almost say, well, that's quite nice, because those guys are actually the fodder creating the volume for you guys to actually make the money off. So, you have to have those losing amateurs to create the volume. But hey ho, that's just what happens sometimes. And actually, speaking on that, I don't know whether Philippe's in the webinar today. I'll just have a little look. I don't know whether he is. No, Philippe isn't. So I won't say too much. But he basically sent me his trading figures for this year. Philippe's been with us for a good many years. He's one of our better traders who's been with MT Predictor for a good many years. And he quite often sends me at the end of the year his actual trading figures from his actual live proper account, and he does very, very well. He makes a lot of money trading MT Predictor, and he sent me his figures for so far this year, and he's actually up quite nicely this year as well. I'm not going to give exact figures because it's obviously not there's confidentiality and all that kind of stuff, but just it's nice to hear from you guys sometimes, actually just letting me know how you're doing. And when I see year after year people sending me their own results, and they are consistently profitable and doing well with MT Predictor, it's quite nice. So it just makes my job a little bit easier when I know you guys are actually making money with MT Predictor. So that's really nice. So Philippe, if you see this when you're reviewing the recording, thanks for sharing that. It was appreciated, and well done on your trading. Just as a PS on this ES chart, if I go out to the 15-minute chart, can you see how it's sort of chopping sideways there a bit? It wasn't really doing much. But what I thought was very interesting, if you then go out to the next higher time frame up, which will be the hourly, just look at this. There's an obvious pivot there, isn't there? Do you see that? A really obvious pivot. So if I right mouse click here, do decision point, just look where the market went to on the hourly chart. Right into DP resistance. So actually, is it any surprise at all that the market backed off and started to decline from there? Is it any surprise at all that the market carried on down? Because you're at not the 15-minute resistance, but actually at 60-minute resistance. So it's just such a pity, really, that we didn't have any clear MTP trend or clear 15-minute DP to be able to come in to get that TS4 sell. That would have been nice, wouldn't it, to catch that? If anything, it would probably slightly clearer on the NQ, because on the NQ, if I go out to the higher time frame charts here, what had the market done? Well, there's that last DP had gone beyond that DP, then come back down again. Here'd be the next pivot to take support. It had gone through that, the next support level down would be, and this would be the last swing into the high, wouldn't it? There's the high. This would be the last swing into the high. So if I right mouse click here, this would be our next DP support level. So can you see how through this point yesterday, the large degree trend would have been down because it had gone through that DP, hadn't reached that DP, large degree trend was down. So on the shorter time frame yesterday, you'd be wanting to look to take the sell setups. And in this case, the sell setups were in the direction of our MTP trend. So here, this would have been slightly clearer to take. And I think this is a good example because here we had the first trade setup. This would have been a trading loss. Losses can and will and do unfold. I think Mohammed, who's in the webinar today, so good to see you, Mohammed. I think you had an example of this 2 or 3 weeks ago, isn't it? When you had a setup, you took it, you lost, but the loss was -1R. Here's another history triangle. So this would have been another sell setup. Guess what? This would have been a losing trade as well. This can be very, very frustrating. You then got the third sell setup, but this time the market came in, it rolled over quite nicely, went down to the first target. But this is the important thing of using position sizing. Even though there's 1, 2 losing trades and only 1 winning trade here out of this particular example, which is very hard work, it is frustrating. Look at the position sizing profit. So here, the profit here was 4.4R. So if you'd made -1R, -2R, plus 4.4, that would be plus 2.4R profit overall. This is why position sizing is so vital and why it's a fundamental part of MT Predictor and has been a fundamental part of MT Predictor for so long, is that it's not the number of trades that you make, it's keeping the losses small. It's not the number of trades you make, it's keeping the profits large. This is why the whole thing about MT Predictor and any professional trader as well is that they don't worry quite so much about having a high percentage of winners, which again, most amateur traders seem to go after. They think if I can make 60% winners, I'm going to be a billionaire. But what they don't understand is what you have to do is you have to keep the losses small first and foremost. And I've spoken about this before, but then after that, you have to try and let your profits run. I mean, if you had been a bit more experienced, rather than coming out to the first target, you'd have seen the higher time frame support down there. So you might have said, well, actually, I'll let that run a little bit further down into the higher time frame support and increase the profit up to, nearly 7R. So that's another tip that we've looked at in the past, isn't it? About 3 or 4 weeks ago, about trying to use the higher time frame DP targets for letting your trade run a bit further. But you see how important it is to keep the losses small and then have the profits large when they come through. I'm not saying this is easy to do. I'm saying psychologically, this is really, really, really hard to try and take losing trades and then keep on doing it. I mean, it's not like amateur traders where you just keep on taking losses and throwing your account away. That's not what I'm saying. And what I'm saying is that as long as the picture's still clear and the trade setup makes sense, then it's okay to take a couple of losses, and these losses will happen. No matter what trading approach you take, there always will be losing trades. Right, so are there any questions on what I've talked about so far? We've had about half an hour so far. The next 5 or 10 minutes, I'm quite happy to basically open up to questions on anything that you guys would like to look at, because I've talked about the main topics that I'd like to talk about. The main thing was really having a look at that W3 or Wave 3 trade setup on crude oil, and then also coming in and having a look at that VS sell on the YM, and then perhaps having a look at the NQ. So they're the things I wanted to talk about today. So really, I want to open it up for any questions. Feel free to ask what you'd like. This is the time when you guys can actually ask the questions and actually say, right, Steve, how do you do this, or what do we do in this respect? So do feel free and ask if there's anything that you'd like me to talk about in this last few minutes. While you're thinking about that, I'll have a quick look at Forex. This is one thing on the pound we were looking at as well, wasn't it? So on a higher time frame, the daily chart. Do you remember what we were looking at? Is that this was the last swing into the low. We had a DP off here. We were saying that's potential resistance. Well, the market's got up to that. It's gone through that. So the next area of resistance for the pound would be off this pivot high here. Potential resistance up just below the 144 area. On the shorter time frames, in this case the 4-hourly chart, there's no setups in around that particular level at the moment. It's gone beyond that. So this would be where the picture would be deemed to be unclear. So I think all of you seem to be quite happy on everything today. So that's really good. So if there aren't any other questions, I'm quite happy to end the webinar a couple of minutes early, and we can zip over to the real live markets and actually do our own trading if you wish. If I pull Trading View in, we see what the markets are doing at the moment. Here's the Trading View charts. So what's the ES doing at the moment? So the ES is not doing much there at all. YM rallying up a bit. Let's have a look at the YM. Looks like there was a potential trade setup down at the bottom there. Let's skip over and see whether that would have been a potential trade setup. I'll just do it in the standalone version. So that VS buy setup. So we go to the higher time frame chart. That was a fairly major low there. Oh yes, there we are. Look, that was quite good. So that was sort of the end of that consolidation. So that would be a fairly major pivot to take a support off. There's your support zone on the higher time frame. So if you go to the 3-minute chart, that would be a potential VS buy setup to take. And of course, this is exchange delayed data. So if we now go to the live data Trading View, that one, it looks like it's rallying up slowly there at the moment. So it'll be interesting to see whether it does actually get to that particular target. So a live example there on the YM. But let's just place the analysis on. So that's pivot -1, pivots back, 1 pivot back, 1 bar offset, because it's not the bar, the pivot, the bar after. Oops, I didn't tick display, did I? And there's it on the chart for you as well. So there's the analysis on the chart for you in Trading View. There we go. So that's our VS buy setup unfolding in Trading View at the moment. Right, so if there aren't any more, actually, you're very right. Actually, the MTP trend's red. Yeah, you're absolutely dead right, Sylvian. Yep, the MTP trend's not red, so that probably wouldn't be a good one to take. Well spotted. Yep, the MTP trend is sorry, it didn't turn blue, is actually red. So that would be against the MTP trend. Sorry about that, I didn't see that. I was rushing, wasn't I? I was rushing. So actually that is not a good one to take. So even though it's at 15-minute support, the MTP trend is not really agreeing with it. So that wouldn't really be a good one to take. So well done, Sylvian. I'm glad you're paying attention. So perhaps I could have said that was a test for you all to see if any of you passed the tests. But no, I did. I was rushing on that one, so I do apologise. But Sylvian, well done. You spotted that well, that even though it's at 15-minute support, MTP trend is red, so that's not one that you'd really want to take. And actually, that's Sylvian. That's probably good. A good example, because look, the market is now coming back down at the moment. So, this is looks like it probably would have been stopped out. Yeah, Mazir is dead right as well, is that we're in and around the open. So trying to take setups in and around the open is never a good idea as well. So there's a couple of good reasons there why setups like that are not good ones to take. So I'm glad you guys are on the ball on that one. So well done. So a couple of reasons there. MTP trend was red. We're just about before the New York Open. So trying to take a trade on the 24-hour chart like that, just before the New York sort of the day session opens at 9:30 is never a good idea as well. And as you can see, that would have actually resulted in a trading loss. So a good example there of something where, sometimes it's easy to get a bit excited and say, oh, that looks like a good trade setup, but then miss something. That's easy to do. So well done to you guys who'd spotted that. So well done. I'm glad you guys are paying attention on that. Right, so I think that's a good place to probably end the webinar there. So thank you very much for all coming in. Hopefully you enjoyed today's webinar and enjoyed having a look at the crude oil W3 trade setup, and had a look at some of the times when the picture's not clear, like on the ES, like yesterday when it's not quite clear. And there's times when you should be avoiding the market. And a good live market example on the YM, where if you're just before the US Open, it's probably not a good idea to take a trade setup as well. So there's a good example there of when not to get too exuberant, particularly when, in that case, the MTP trend was red, so it's telling you not to take it anyway as well. So a couple of good examples there. So anyway, have a good trading week, everyone. Hopefully we get some good clear setups coming through in the next few days. It's always nice to have some good trade setups. So have a good trading week, everybody. And we'll be back to do it all again in a week's time. And we'll see what setups we can look at in a week's time. So thank you very much, everybody. And we'll be back to do it all again in a week's time.